and welcome to the Theo video for Tuesday, January 12th, 2016. I'm Jeff White, and in the last day and a half, this market has attempted to turn a little bit of a corner, short term anyway, but it ain't out of the woods yet, as you might say in Texas where I live. So, on Monday afternoon, we discussed in Theo Chat really the need for a higher low on an intraday basis, and we looked at the S&P 500 futures, the ES, and we got that higher low Monday afternoon. We talked about it in real time and the importance that it played for kind of opening the door for a short-term bounce that may last longer than a few minutes. And then today, stocks gapped higher, and it seemed to be poised for a little bit of a follow-through type of move to the upside. But ultimately, it just couldn't stick. And so for the third straight session, we saw another upside gap attempt get sold, and it's exactly that kind of discouraging price action that can happen on the heels of a big decline here in the near term that can ultimately produce a little bit of a short-term turn. I mean, we lifted this afternoon off of the session lows. We did finish positive on the day here for the S&P 500. You can see that we painted a green bar here. All right, go out and celebrate, right? But the bleeding has stopped temporarily, but are we going to be able to count on some more upside momentum? I mean, look, there's grounds for it, definitely. Anytime that the rubber band gets stretched like this here in the short term, like this on the current move, you've got the potential for that. I mean, if we look here at the Nasdaq, we're looking at a move here for the Nasdaq that was basically from this close on December the 29th down to the lows. We're talking about the Nasdaq giving up over 10% over the course of that 8-day move into yesterday's low. For the S&P 500, we're talking about a move over that same period of time that took this index off to the tune of 8% and change. And then we're talking about the Russell, the more speculative small cap index. We're talking about a move during that same period of time where this index shed over 11% during that decline that actually stretched into day 9, which was today's bar, as it set yet another 52-week low for the fourth straight session down here at 1028.14. So we had undercut 1078 on Thursday. We broke further on Friday and Monday, and then even for good measure, one more day today. So, what's it going to take here for a little bit of a turnaround? I mean, this has been a very quick, nasty sell-off, and the table has definitely been set for some kind of a rebound. But the big question is, are the guests going to arrive? I mean, are they going to sit down and eat this? I mean, we're going to find out soon, but it's fair to say that both sides, both bears and bulls, are rooting for a short-term pullback. They need a lift in both cases. The bulls, they just want some relief from this punishment that they've endured since the end of December. Make it stop. You can almost hear them yelling. And then the bears, they've gotten a pretty swift move here in their favor, and they've had numerous opportunities of late to reduce their short-sided exposure and kind of lighten up there. And now they're rooting for some higher prices so they can reload and maybe, jump back on that train again. So what's it going to take? And is it going to be that easy? Well, if you've been around very long, you know that the market just is not very often accommodating to the masses. So we've got to definitely keep that in mind anytime both sides or both camps are kind of in the same boat. Today, though, something interesting took place, which was that the bonds started to make a significant move higher, and they have been lifting in recent days, but today they started to exit this little wedge here that we see on the daily chart. This is the /ZB. So these are starting to make a little bit of a move here and sort of exit this kind of compression look that we had seen being established over the past few months. You can also take a look at TLT and see a very similar move here as TLT starts to clear the upper end of this. And so, there's a really interesting thing taking place with this wedge starting to get resolved to the upside, and especially while stocks are bouncing. So why is money flowing into this perceived safety of bonds? I mean, you can see it in both cases, but the fact is we're starting here in the TLT, for example, to get north of 123 and start to make a little bit of headway here to the upside. and start to kind of resolve all this indecision of the past several weeks. But that is not necessarily a great signal for stocks. I mean, look no further than back here in August of last year, where TLT painted a high on August 24th. You know, it's no surprise that we looked at the S&P 500, which happened to paint a low on that very same day here, August 24th. So anytime you see S&P 500, in this particular case, it shed more than 11% over the course of just a week's time, and created that low on August 24th, the same day that TLT registered that high. I mean, both of them immediately reversed and went different directions. S&P lifted here in the short term. We saw a significant rally back up into that late August high. It took a few weeks, and ultimately we rallied much further from there. But TLT, you know, it really has not approached that high that it set on August the 24th. So it suggests that there may be a little bit more to the picture now that we're starting to see stocks attempt to lift and bonds starting to also kind of break out here. So keep close tabs on the bonds here, because it's just not likely that we're going to see both stocks and bonds rally in lockstep. If there's an appetite for risk starting to return to the market, even for just a short-term move, even just for a bounce, then why aren't bonds starting to back off? I mean, we're going to find out soon enough, but something here has got to give. Thanks for stopping by TheoTrade. Be sure to check out some of the archives of today's sessions while you're here, and we will see you in the chat room tomorrow.